Welcome to 22 Minutes in Lending. I'm your host, Vince Passione. Today I'm joined by John Ballantyne, the CEO of Tru Treasury, and a leader with deep experience across underwriting, treasury, and payments. John has held senior roles at SunTrust, Amazon, Travelers, and Vanguard. He's a U.S. Army Reserve officer and an Iraq war vet. Under John's guidance, Tru Treasury is helping credit unions and community banks compete and serve business members at the highest level and was named CUSO of the Year. John, welcome to the podcast.
Hey, so happy to be here, Vince. Thanks for having me on the show.
John, it's great to see you again. Last time I think we were at a leverage conference and I was chatting with you and your wife. I think that had to be at least 2-3 years ago. But great to see you. First, thanks for your service. And the other day I was on LinkedIn, I saw a social media post. First, I thought it was some kind of AI-driven image, but it's you and your brother, Mark, are twins and you're both in service. Is that right?
Yeah, that's right. So there are two reserve officers, two Lieutenant Colonel Ballantynes out there that look and act a lot alike. And it just so happens after 20 plus years of doing that, we are both instructors in that instance, instructors in the same class teaching future officers.
Wow, that's amazing. That is truly amazing. Thank you, and thanks to Mark for your service. So, John, let's start off with, I always like to start off with the founder story, John. Why Tru Treasury? What did your background got you there? And I think it's 5 years old. So you're saying you started this around 2020, which is an interesting time to get started. So let's hear the story.
Yeah, my story goes back a lot further. So me personally, my background is in finance, and I've held a lot of financial roles. Before I came to True Treasury or started True Treasury, I was at big bank, SunTrust Bank, became Truist Bank, in a variety of treasury management roles. But before that, I owned a payments company. So I say my background is unique because I had this entrepreneurial payments experience, but also big bank working in multiple roles, variety of roles in treasury management. So that brings us to 2020, or a little bit before 2020. A group of credit unions and industry partners of credit unions got together and they realized a couple of things. One, field of membership rules changed in 1998 to expand business membership. Commercial loans are like hockey stick growth. So credit unions, it's been an engine of growth for them. They're hiring in bankers off the street to grow these commercial programs. But as these commercial programs are growing, they start to mature out of just CRE type lending. And you have bankers who say, hey, we can get more into C&I, SBA, start serving the needs of businesses. But to do that, they need treasury management officers to help support closing the deposit side of the deal, the fee side of the deal. So our ownership saw that need. They said, let's do this. Looked around the credit union market. Hey, the banking industry, big bank industry has most treasury management talent cornered. So they found me through a series of events. We spent about 6 months talking, what could this look like? And March 12th of 2020 was my first day where I said, hey, let's do it. Let's jump into this, start a business. And then everything in COVID shut down the very next day. So it was a great time to start a new business.
Well, let me back you up. I want to unpack it a little bit. So was this members development, core, and leverage? Who were where the original idea come from?
So it was really a group of like-minded credit unions that invest in a lot of CUSOs together. There were 4 original credit unions, 3 of them in Michigan, 1 of them in Florida, and then LSCU or Leverage, seeing all their constituent credit unions and seeing this gap said, hey, this is something that we can deliver to our credit unions. Let's get in on this. And those entities with a technology company funded True Treasury for us to start.
So Steve Willis and company over at Leverage, great. We've had Steve on a few times and Samantha Beeler from the league. So great. So John, your structure then to get started was a CUSO. Talk about the benefits to you in establishing that structure, how it's helped, and then are there any challenges in doing that when it comes to liquidity management? Because we have other fintechs that listen to this podcast as well. So any challenges you think about capital going forward, and what were the benefits of starting out as a CUSO?
One of the big benefits of being in a CUSO is that it's credit union owners, or primarily credit union owners. To me, that was a great benefit because it's a built-in marketplace. The collaboration was the biggest difference coming from the banking segment into credit union segment. Literally at my board, I have 4 CEOs of credit unions sitting around the table talking about their businesses, which just blew my mind. And I was able to work with each of their individual teams to understand, well, where are you on this treasury management journey? What do you need? How do we get that started into business? And that's really how True Treasury launched, and it's expanded quite rapidly, I might add, through the credit union movement.
So John, you're not a large organization and you're pretty young. And I was
Yeah.
looking at the website and it looks like 70 credit unions now. Is that the size of the portfolio as far as client base?
Yeah, we have a little over 70 credit unions that we serve, and we serve our credit unions across a variety of spectrums. Some of our clients I would call our advisory only, so we have a consultant function. Some of our clients need product, you think of business banking, treasury management product. Some of our clients say, hey, the ROI, the financial model makes sense to have True Treasury be our treasury management department, and we can deliver the whole team and the product, and typically at a favorable value proposition where they can attain ROI very quickly on their programs.
So John, if you had to describe True Treasury in that sort of 10-second elevator speech, and because when I think about credit unions, especially in C&I, for example, I don't hear a lot about it, right? I mean, 5% of credit union assets are actually in C&I. Describe it to me.
Yeah, the elevator pitch of True Treasury is we're non-credit business services, which includes cash management, but it's not just the product piece of it. It's the talent, the strategy, the structure, even the disclosures that come with that. Very simply said, we can deliver the whole program and talent for typically less than it would cost to hire just one treasury management officer. That's product and talent included.
Excellent. So let's dig in. Let's dig into each of the solutions and how you offer them. So I was looking at the website, right? There's wires, there it looks like ACH, there's liquidity management, deposits management. Talk us through each of these and then talk about how you deliver them, John.
Yeah, and I might even pull it up a level. So our products are really two things that we provide. We provide a treasury management program. So that would be the servicing piece, which in a lot of ways I think is the most valuable thing we add. But you cannot deliver a treasury program without treasury product. So we have 3 digital platforms. One of them's a banking platform, table stakes. The 2 other platforms we have, I think, are really value driven and differentiating as well. So one of them is called our Treasury Relationship Management System. And very simply what it is kind of like a hybrid between Salesforce and an analytics tool that allows you to look at hurdle rates and profitability at the line item level, officer level, branch, or even the regional level or the whole credit union level. And it allows you to do relationship pricing. So if there's a commercial loan opportunity, a deposit opportunity, some fees, services, payroll, whatever, if a banking officer is looking at that deal and say the prospect is, loan rate sensitive, well, guess what? Price it into the deposits, price it into the fees. There's a way that you can achieve the hurdle rates that the financial institution needs, but still price the entirety of that relationship to the sensitivities of the prospect and win the deal. And then you get the benefit of the loan, the deposits, and any non-interest income with that relationship. So that's our Treasury Relationship Management System. We simply call it RMS. And the third one is our Treasury Risk Assessment Calculator, which we call TRAC. And again, this solves for the fact that credit unions are newer to the treasury space for risk management. We had one client who would send their ACH risk to the commercial lending department who would sit on it for months. Like, what do I do with these low exposure rates, these large limits? I don't know how to set this. And we created a platform with industry experts that does KYC, risk scoring for total operating exposure of ACH, digital wire origination, and RDC if a member or client has it, and then dynamically assesses limits recommendations, workflow approvals, and documents it for those annual reviews or if examiners come in. So that's been our most popular platform and product that we've created at True Treasury.
Now, credit unions acquired 25, I think it's 25 banks last year. And they got to a pretty slower start this year. Do you get called in when a credit union is looking at an acquisition and they see that they've got a C&I team to assess whether or not this makes sense and how they might use your products? And do you get engaged at that level on the sort of that strategic planning for an acquisition?
Yeah, certainly. I would say we're typically not engaged on the planning stages, but usually once the acquisition's announced, start getting into technical. Oh no, we have to bring over a community bank's account analysis relationships in some of these more complex treasury relationships into our own core that's not set up at all for that. We have no experience. That's usually when we'll get a connection and we'll start to work with that credit union on how to deliver those services the community bank is delivering in their core, how you can round out the product set, change management. In one case with a credit union that had acquired a bank, we were a bridge to train the team, to process, to work with their members as they started to train some of their bankers in their system. So we actually operationally worked as a bridge, and now they use some of our products. So there's a few different ways we approach it, but we've gotten very familiar with some of the major cores capabilities around sweep accounts, around account analysis, and we can provide some pretty solid advisory there, and how to set up a commercial deposit account structure type.
Now, John, you referenced changes in, I guess it would be the Credit Union Act when it comes to memberization, field of membership. My business, right, at LendKey, it's straight up consumer, right? We fall into the field of membership capabilities of community-based, right, seg-based, association-based. Can you just talk us through the change in that Credit Union Act that allowed this member business lending? Is there a cap? How do I take someone who's not quote unquote a member? How do I memberize somebody, right, to offer this commercial loan?
Yeah, the interpretation of that is dependent on quite a few things, most notably the charter. But you're right, in 1998, field of membership rules, what I'll call liberalized, that allowed businesses, different types of businesses, to bank more at credit unions. Now, the problem when those rules changed, and some think to appease the bank lobby or whatever, there's what they call a 12% member business lending cap. So a couple of things. That 12% does not apply to credit unions that are low income designated credit unions, which is about 50% of credit unions. The idea being they don't want a cap. They want to help Main Street. They want to help all these businesses that might not have access to financial services elsewhere. So that opens up about 50% of the credit union market. For the other 50% that is subject to that, there's a lot of different strategies on how to manage to that. That's typically around assets, lending assets, for example. But when we start getting into deposits, it really depends on the charter. Does that business have a branch within that? If it's a community charter, within that community charter, the seg-based charters have a lot of opportunity in business that I don't know that a lot of credit unions have recognized that they can get a lot of businesses. So for many credit unions, they can service businesses as long as there's an affiliation across the country. So there's ways to do it.
Great. So, John, let's talk about trends, right? What are you seeing in commercial lending right now, right? We saw the real estate market sort of take a huge hit. There were lots of concerns about those loans. Seems like it's starting to level off a bit, but trend-wise, deposit growth, account opening, how you see this business growing over time?
I would say right now, within the past 2 years, I've seen more interest in C&I and SBA lending from the commercial departments of credit unions than I had seen since we got started in 2020. It's a big deal. And I think eyes were open. One, banking talents in-house, we're acquiring banks. So we're starting to understand, hey, there's more of a market for us out there. Number two, what happened in CRE markets is a risk, right? If we put all our eggs in this one basket, there's other opportunities we can into businesses. And a couple of years ago, there was a pretty major liquidity crunch. Retail deposits were very saturated. Commercial deposits became a really good place to go out and source liquidity if you had the right setup, if you have the right programs. So that's become more popular. So what are some of the trends I'm seeing? I've definitely seen a lot of openness. I've seen a lot more bankers coming into credit unions. If you look at deposits, the percentage of deposits, what I'll call business or commercial deposits in credit unions, has almost doubled. Now, still a very small piece of the credit union deposits, but it went from about just a little under 3% to well over 5%. I'm talking pretty general now for the credit union movement, which is still a very small piece, but has a long way to go. One other piece of data that I found really interesting, we were looking at True Treasury, is we took the top 20 commercial lenders in the country, credit union lenders in the country. And we said, how many of these credit unions are funding their commercial loans with commercial deposits? What do those ratios look like? And when we looked at it, there were exactly 3 of those 20 that came a little bit close to funding their commercial loans with business and commercial deposits. The rest of the ratios were really out of whack. So that tells me there's a lot of work and a lot of opportunity in credit unions to start funding at least a better portion of their commercial loans with commercial deposits. So the retail deposits can be used to fund home equity lines or fund auto loans.
John, you talk about niches. I still remember a conversation at a conference. We were talking about municipal deposits. Can you talk a little bit about that and how credit unions get involved in it? Is it through CDFI? Is it through low income designation? How did they get there? And are they getting any traction there?
It's a mixed bag. So I will say there are still some states, particularly in the Southeast, where they just can't play in the space. They just can't. They're prohibited from taking any sort of public fund deposits. But then if you go to a state like Michigan, some of our clients, we're seeing really good success in public funds. And I'll tell you why. It's because these municipalities, they want to bank in their community. They want to bank at the credit unions that are in their communities, where that maybe if it's a community that banks have left or largely left, that's who they want to bank with. School systems have been a really powerful source of deposits and a business relationship for some of our credit union clients. Again, if you think about credit unions, a lot of them started as teachers unions, people helping people. There's an affiliation with schools. So I think there is excellent opportunity in the public fund space. It's just starting to get tapped by the credit union movement right now. And those are the types of deals my team likes to work on because they come with really big deposits and really big fee relationships as well. So we really encourage our clients to look at municipal deposits, look at public funds.
Great. So John, let's talk about what's next. We were chatting earlier, we had Becky Reed on. She's the COO from Bank Social, and we were talking about stablecoin and how you'd look at stablecoin, right? And with this Genius Act, Becky did a great job of explaining how this is really a payments play, right? It's a new payments rail. How do you see stablecoin and new technologies impacting your products, and how does it help the credit union's adoption of it?
Yeah, stablecoin is really interesting. So there's a lot of talk in the crypto space right now. There's a lot of talk of how the use cases can go, and it's here to stay. We're starting to see it come out in some tools. However, I don't think it's so much of a revolution of payments as it will be an evolution of payments. It provides another means of doing payments. And particularly crypto has a really strong use case. Actually, let me even take it even broader than just crypto. Let's talk blockchain. There's a really broad use case in international payments. So how does settlement works? If you're in liquidity tight situations or if you're working across foreign exchanges. And then blockchain more in general is excellent for security. So authentication, embedded digital fingerprints where no passwords required. So no password, no theft. So there's a good security component of that. So that's what I have to say about crypto. At True Treasury, we're still evaluating some of the business use cases that we can do. We're definitely looking at it from a security perspective and starting to look at it, what it can do for some of the international, mainly international use cases. Other things on the horizon that we're starting to do more of and see more of are things like fraud prevention, predictive or behavioral analytics. So of course we have things like positive pay, check positive pay, ACH positive pay, payee positive pay, but there's this whole other component of how do you stop any sort of behavioral elements that are out of sync with how that business typically transact to alert and then incorporate in that exceptions engine. So that's where there's a lot of work being done there. We're working on some of that right now. Interoperability is really one of the big things as well. So of course you've heard of open APIs, but we're really want to take it a step further than that. And we're looking at embedded services. In this way, this is how we think, and this is kind of very credit union specific or fintech specific, but our idea is you can deliver better services, better, cheaper, and swap them in and out easier if they're embedded services in an application that we provide a credit union. So that's another piece that we're taking a deeper dive into. How can we make it easier to incorporate new technologies, better technologies for our clients as the future use cases come? And it's really a much better experience than going down a menu and saying, I think I want to do a wire there, or I think I want to do an ACH. We'd rather have intelligent routing on those payment rails.
That's great.
And the one last thing I'll say, there's real-time payments, of course, is now. And I would say those are where the use cases are really starting to develop. And on the payment side of real-time payments, a lot of financial institutions are receive. What we're working on is ways to make them more send institutions. And we're working on some tools right now to enable our clients to do that.
Yeah, I was gonna back you up into FedNow and because we jumped right into stablecoin, but on the FedNow side, adoption of it, credits moving there. It sounds like you're seeing pretty broad-based adoption.
Yeah, well, definitely on the receive side. So many financial institutions, everybody's a little bit nervous on the send side. How do we send? Which is ironic outside for like a member, a business to send through it. Credit unions will send credit unions to credit unions, but we're working on those use cases, things like insurance companies or attorneys. So there are some very strong use cases. We just need to ensure that the comfort level and the risk policies support those real-time payment send opportunities to provide to members.
Great. John, so looking ahead, last question. So what does True Treasury look like in 2030? What's happening with commercial lending? What's happening across the treasury space?
Yeah, so one of the great visions for True Treasury is, our first step was, is there a market? Not only is there a market, there's a massive market. But right now what you see is a lot of segmentation of commercial lending CUSOs. You see compliance CUSOs, treasury management CUSOs. What I see looking in the future is starting to bring those together to deliver commercial banking as a service, or the pieces that are needed, very modular. So a lot of credit unions, community banks, and even bigger banks, we have a vision for moving upstream to bigger banks. They have most of the pieces, but there are going to be gaps that we can help fill. So we will have a modular business that'll help fill those gaps to deliver commercial banking as a service for the credit union, community financial institution industry, and beyond.
Excellent. Well, John, look, that's a wrap for this episode of 22 Minutes in Lending. Thank you so much for joining us today. It was a great conversation.
Hey, thanks, Vince, for having me on.
Awesome. And to our listeners, thanks for tuning in. Be sure to subscribe, share, and join us for our next episode of 22 Minutes in Lending. Thanks so much.
Thank you for listening to the 22 Minutes in Lending podcast. We hope you enjoyed today's episode. You'll find links to any resources mentioned in the show notes. If you're enjoying our show, be sure to subscribe and leave us a 5-star review.